We head into the last month of the year and closer to that fiscal cliff. How should you be positioning yourself right now? Let's find out in our closing bell exchange today. Mark Tepper from Strategic Wealth Partners is with us, and so is our Rick Santelli. Mark, are you trying to look past this, or are you trying to play the volatility right now that we're experiencing these days?
No, for our clients, when we're managing money for our clients, we're really working on a 5-year time horizon for all of our clients. So we are looking past it, but at the same point in time, we're telling our clients that, really embrace volatility. Any volatility that we see over the course of the next 30 days due to any of these issues surrounding the fiscal cliff, use these as potential buying opportunities, because, the way we see it right now is that over the course of those next 5 years, we do think that if you're in some good, high-quality stocks, you should be able to provide, high single-digit returns over the course of that time frame.
Rick, today we've not seen the kind of volatility we've had lately, but we still had public posturing politically from Speaker Boehner and the president. Do you make anything of that? Is the market becoming immune to all of the public outcry, or what?
I don't know about the public outcry issue, but I can tell you this. It doesn't surprise me that on a Friday, the stock market would pay less attention to the tape bombs than other days because of the weekend and the issues of trading and any surprises that come up. I would doubt if you're going to even see much movement in the last hour. Treasuries, on the other hand, they're very similar. But where you start to see something different is, as our guest was talking about, move outside of Treasuries. If you look at Barclays, whether it's their high yield index or their investment grade index, they're not at their best levels, but those have been big movers. But the biggest mover of all, Bill, is the tax issue surrounding munis. That MUB ETF was started in 2007, all-time new highs today. And even if you look at the Lipper or the Barclay indices, it reflects the same thing with regard to munis. So in a way it's sad, in a way it isn't. I'm a capitalist, but it underscores that all of these tax implications that are moving trades are in a way counterproductive to the Democratic theme, because they are circumventing the positives that are supposed to be through tax structure. I guess it really argues for reform if all of the money you're supposed to get from these companies is all getting pulled into today's tax rates.
What about that, Mark? There are those who say get into the high yield, go to the munis since taxes are going to go higher. But are they expensive now? Has that become a crowded trade? Is it too late to get into them right now?
The way we're looking at it right now is obviously capital is going to chase yield. And when you can't get any yield in the form of treasuries, CDs, there's not a ton of yield in munis right now. Investment grade bonds don't look as attractive as they did a year ago.
Right. So, so you're not going to buy them. Where are you going to go to find yield where you can also feel like you're finding value at the same time?
Yeah, we are definitely looking at investing in high dividend paying stocks. I mean, the assets that we're looking at right now are really, those stocks that are yielding between 4% and 5%, and we're looking for stocks that are growing at a high dividend growth rate as well.
Let me bring in our friend Gordon Charlotte, one of the traders on the floor of the New York Stock Exchange here. Explain to us the rebalancing that's going to occur at the end of trade today and the impact that could have. And also, do you think that's why we're not seeing as much volatility today as everybody gets ready for what's happening on the close today?
Well, I think it's a couple of things, Bill, and I think that's part of it. Certainly, we've had muted volume, muted volatility going into the end of the day, but we're already seeing that the imbalances are sizing up to be sizable. So it's going to be a big event, big trading event, big liquidity event, if you will, down here on the floor of the New York Stock Exchange on the close. But really, let's face it, everybody's still looking at the fiscal cliff issue right now. Let's face it, every time a politician, they're like actors, and every press conference is like a theater. Speaking of theater, a lot of buzz on the floor here, hot tune at the Beacon tonight and tomorrow night, but that's a separate aside. I can tell you this, though. The stocks that have been declaring special dividends have been outperforming the Standard & Poor's in that time period. People are getting ready to prepare themselves for a change in the tax code. We're not only seeing the corporates doing it, but we're seeing actually the executives exercising options, looking to sell out their positions. So right now, there's almost seems to be like immobilization just because people have a lot of uncertainty.
So I don't want to make too fine a point and get too wonky about this, but you expect some volatility on the close because of this rebalancing, yes?
Yeah, no question about it, Bill. We're definitely going to be seeing a lot of paper coming in here. Well, I'm dating myself when I say paper, but yeah, there's going to be a lot of activity here. We're going to see some moves. We don't know where they're going to come from, but, you know, everybody's going to be coming into the house as we get to the close.
Hey, Rick, what do you make of the negotiations right now? I mean, are you hopeful we get something before the end of the year, or what are you guys on the floor expecting to happen right now? Do we find ourselves going into the first quarter of next year but without a deal?
You know what? People on the floor look at it this way. They believe what's going on is purely a game by both sides and that the good of the country isn't being presented properly. Now, having said that, they almost universally all agree that the meat of any reform obviously isn't going to happen between now and December 31st unless Congress goes to Hawaii with the president. But they do think that reform is going to end up being a bigger issue than the tax issue because without the reform, any kind of short gap measure pretty much pushes reform into the very distant future because all the incentives then disappear.
Right. And Mark Tepper, we know that corporate profitability growth has been slowing in this country. Does that growth rate continue to slow or even get much slower if we don't get a deal anytime soon? Or does that affect profitability, do you think?
Absolutely. I mean, right now, I feel like a resolution on this whole fiscal cliff is being priced in by December 21st. And if we don't have a resolution, even if we just have, let's say, a one-year patch, companies are not going to put their trillions of dollars that's sitting on the sideline to work. So we do need something. We need a resolution, and it has to be a long-term resolution so that everyone is comfortable really making those sizable investments that are going to help us to spur economic growth.
And what sectors are going to lead us higher here, do you think? I mean, who is immune to the kind of volatility that we're going to see or the kind of effects the fiscal cliff could have on the economy here, Mark?
Honestly, we're essentially sector agnostic, you know, when we talk about managing money on a 5-year duration for our clients. But we're focused on, when you look at some of the master limited partnerships that are out there, the Kinder Morgans, you know, Spectra Energy looks like a pretty good play. When we're looking really at the 4 to 5% yielders, right, companies that have a good track record of increasing those yields, we're staying a bit more defensive. We're sticking more with consumer staples, you know, so we're definitely, you know, kind of tilted towards that defensive end. But we're going to stay there. As long as growth is slow, that's where we feel we can get the best risk-adjusted returns for our clients.
All right. Thanks for joining. Mark, good to see you. Thanks for joining us. Rick, have a good weekend. Gordon, have a good time at the Beacon tonight.
Thanks, Bill.
See you later.